Now let's analyze what's happening in the markets with Nikhil Srinivasan. He is Allianz Chief Investment Officer for Asia and the Middle East. He, of course, oversees about $30 billion of assets. Let's touch on Greece. Is Barack Obama's support for Greece enough?
It helps. I mean, Greece is a bit like a play, a Shakespearean play. I think Act 1 is over. They've raised the money, $5 billion, 5 billion euros. I think they'll be able to refinance their obligations coming up in April with help from the Eurozone. But it's not just about Greece. I think this is a bigger problem. I think Greece is just being used as the whipping boy, so to speak, here. You've got a problem in Europe, you've got a problem in the world. And as someone said to me the other day, someone a lot more eloquent than myself, the world's running out of fiscal space. So we've got a fiscal problem in many countries. And it's not just limited to, of course, the Eurozone. You've got an issue in the US, you've got issues in Asia. So I think overall, Greece is okay. So let's not worry too much about Greece short term.
But are you then saying as well that Greece is just the tip of the iceberg?
Greece is important. Greece will allow this sort of situation to manifest itself in other countries. So Greece is the beginning. I wouldn't say it's the tip of the iceberg. I think the other European countries that really have issues as well. And I think you're going to see that happening or coming to be in the next sort of year or so.
But it does seem like concerns over Greece it's subsiding, easing somewhat. If you take a look at the VIX index, it's
Yes.
on a record losing streak, indicating that perhaps investor sentiment is coming back, confidence is coming back.
It should. I think the Eurozone is standing behind Greece. The IMF might get involved. I'd say the IMF gets involved more and more in Europe as the months go along. So I think that's right. The market is reflecting the right things near term on Greece.
Still a trader's market. How do we play such markets?
Trade.
Volatility, order of the day. Trade what? What are we looking at? What should we be doing?
Trade anything. It depends. I mean, it depends on your time frame. I think we can talk about equities. We can talk about currencies.
Let's talk about equities first.
Obviously, with the euro the way it is, I like German equities. I think they're a buy. I think US equities will do well relative to Asia. So I'd rather be long NASDAQ, for example, against Asian stocks. I think if you look at the last 6 months, the US has actually outperformed Asia quite markedly. And I think that'll continue for the next several months.
But you have to stock pick.
Yes. In Asia, you have to stock pick particularly.
And in the US, how would you play it?
A NASDAQ. It's a broader index. I think the Dow, the S&P have larger companies. They're more dollar invested because they get a lot of revenues from abroad, and I think that'll affect them with a stronger dollar. So I'd rather play NASDAQ. It's got tech, it's got industrials. I think it's a better play.
Blue chip, the way to go?
No, NASDAQ.
Okay. Now, I want to take a look at currencies at the moment as well. The euro. What's the story there?
I think
sliding
the euro.
And keep sliding?
I think the euro trying to find some support here. I think the euro finds some support here for the near term. I think the euro trend over the next year and a half is weaker. That would be my view. But I think for the time being, with Greece getting a backstop, raising money, I think you could probably find some support around just these 135, 136 levels. I don't see the euro rate collapsing from here. I'm more nervous about the pound, actually.
Why?
Britain has to keep running very loose monetary policy. They can't stop the QE, the quantitative easing. They've got an uncertain election.
What can it do then to provide some stability for the pound?
I'm not sure if they really need stability. I think a weaker pound is good for the economy. So I think, we're going to see a weaker sterling. I'd rather be against sterling at this point than the euro.
And your projection for where the sterling's headed, if it's going to plunge, is it going to...
I'm not that clever, but I say...
Oh, come on. Get a wild guess, a ballpark figure.
Well, why not 125 on the sterling at some point later this year or next year?
And euro?
Probably about the same.
And as far as the dollar is concerned, I mean, there are mixed feelings about the dollar. Some saying that perhaps there are indications the U.S. may not be in as bad a situation as we first thought. That's providing some strength to the dollar.
I think so. I think if you look at the data is showing a very, very strong recovery in the U.S. And I think this is going to continue for the next few months. The industrial production data, I think you can see it. I think there's, just being sort of outright bearish dollar the euro, U.S. economy near term isn't really something one should think about. I think the bigger problem in the U.S. is unemployment. They aren't creating jobs yet. So you've got to worry about the U.S. But I think the next few months should continue to bring good numbers in the U.S.
So what is it contingent on jobs numbers? I mean, the latest indications are that unemployment will decrease.
It's not contingent. I think it's contingent on economic numbers, which remain reasonably good, actually, if you look at the last readings.